Hello everybody, this is Toni Turner and welcome to the market now as of about noon Eastern on Friday, January 5th. Well, the labor market entered 2017 with a slight disappointment. The December jobs report from the Bureau of Labor Statistics out this morning showed non-farm payrolls grew by 148,000 while the unemployment rate stayed steady at 4.1%. Slightly missing expectations. Economists expected non-farm payrolls to grow by 190,000 in December, while the unemployment rate was expected to remain at 4.1%. The unemployment rate is currently at the lowest level since December of 2000, so I don't think we have much to complain about. Now let's go on to three charts that could give us some insight into the week to come. Today we're going to look at a different chart than we usually do to open our program here. We're going to look, this is needed, we needed to do this for a while, so this is a great time to do it at the beginning of the year. We're going to look at a monthly chart of the S&P 500 SPDR, symbol SPY. As you all know, this is the exchange traded fund that follows our S&P 500 benchmark index. I wanted us to see in a bigger picture what's going on in the market. We know the market has been making new highs like crazy, and I wanted you to see a picture of this. We can talk about it in words, but sometimes the pictures are really revealing. And so when I captured this monthly chart today of the SPY, the SPDR, it was trading at $272.42. This is, of course, yet another new all-time high. Now, if we look at this chart, it's really interesting. I remember here the years 1998. That's when I moved to New York and started trading in a trading room. Those kinds of rooms were around back then. They're not anymore. I traded in a trading room with about 15 people, and it's where I learned to trade. It was really interesting, and I remember our mentor saying to us back then in the room, look at the chart of the at the time the S&P 500. It just made a double top, and you can kind of see this here on the monthly chart. And I remember him saying that could mean that we're due for a pullback or retracement. And of course, that was also the top of the tech bubble. And so we did naturally have a drawdown, and a lot of those tech stocks, tech companies went away. We had then the bear market of 2000, 2001, 2002 came down and then made kind of a double bottom here on this monthly chart. So double top, sent it down, double bottom, sent it back up. Great years, kind of a nice market there up until 2007. We got overbought again. And of course, this was resistance from the prior high in the year 2000. So that was a kind of a obvious technical place there to get a little stop. But then we fell into our financial bear market. And of course, if you all were in that, you remember this was a big, big downturn. And actually for a lot of people, kind of a frightening one, especially if you were looking to retire in the next few years and your account was falling. Then the SPY came down dramatically. I think it came down to about $67, then started moving up higher again. And of course, then in 2009 started moving up and created the massive bull market that we've seen since 2009, and now we're at 2018. And as I captured this chart again today, it was at $272.42. or about 27.24 on the S&P 500, yet another new all-time high. Now on this chart, I've plotted the 20-month moving average. It's a nice overall moving average, and as you can see, the market likes to walk up this moving average. Sometimes it falls below it, but it likes to walk up this line. And you'll notice about what a premium the SPY can get. About how high can it get over the 20-month moving average before it needs to come back in, before it needs to put its foot back on the staircase. I call the 20-month moving average a staircase. It's certainly acting like that. and how high can it go before it needs to put its foot back down on this staircase. Of course, we see here that at the end of 2015 into 2016, it actually fell below the staircase or the moving average line, but rallied right back up, and now we're really in a beautiful, beautiful uptrend. But what I want you to notice here is the premium at which the SPY is trading to its 20-month moving average. It's trading at 15% above this line. So how much longer this move can go on? I'm sure generally the uptrend can continue, but at some point here, I suspect we will need a little profit taking to come in. Now we look at the 14-month RSI here. The RSI is considered to be overbought when price moves over, when the indicator moves up and over the 70 mark. Right now the RSI is very overbought at 84 on the reading here. It's OB overbought. And so at some point here, not a big drawdown, not a big bear market, but at some point here, I think the market will probably come in a little bit. So to that end, I have been taking some profits off the table for the last few weeks, especially on growth stocks. Growth stocks, if the market pulls back or retraces, growth stocks tend to move down from 1.5 to 2.5 times more than do value stocks. And of course, we've got quite a few value stocks now, like utilities, that have really fallen hard. Of course, that's on the back of rising interest rates. So, but still, there are value stocks out there that might be worth looking at should we see a retracement here, because we are getting definitely overbought here, and down the road here in the next couple of weeks at some point, I'm looking for a slight pullback, and that's good, because that will give us a lot of opportunities to get into stocks that may have become overpriced in the last few weeks. So, but still, we can't argue with success. The trend is up for now. Let's just be wise and keep an eye on it into the next couple of weeks. Our next chart today, we're back to a daily chart of the Power Shares QQQ. In Tony's Market Club, we watch the QQQ as a representative of the NASDAQ 100, a very important index, and of course its moves are fueled by the likes of Amazon, Facebook, Microsoft, Intel, Apple. It's soaring in another all-time high today at $161.40 when I captured this chart. We've had 4 days here, tiny gap up the first of the week, but 4 days here of gapping up slightly and then gapping higher every single day. Now this kind of pattern is familiar to me. I've seen it a million times. When you see strong candles opening at their lows and closing at their highs each day, that says the buyers are definitely there. Those are big, big candles. The first two bouncing off the 20-day moving average here, the red line. The next two candles have been smaller range days as the enthusiasm in the very, very short term wanes slightly, and this is a very common pattern. So again, today we're at 161.40. Should we need some profit taken to come in here during the coming week, we do have support here. The 20-day moving average is coming in at about $157. We have a nice, strong, short-term trend line here. As you can see, I've touched four points with it, so that makes it a pretty decent trend line coming in here about 156 and change. Then we have support here, price support at 156. We have more support here at 155 where the 50-day moving average is coming in, and so forth. So the Power Shares Qs, the NASDAQ 100, very, very strong here, but the way this pattern is moving in the very short term, I could see a little pullback coming in. And if we look at the 14-day RSI, we see that it is coming into overbought territory today. Keep an eye on the Qs next week. See if technology needs to take a rest, or maybe it doesn't. Of course, we never know with the market. Maybe it doesn't. But I'm betting in the very short term that at some point here it needs to take a retracement. Our final chart of the day is the Power Shares Clean Energy ETF, symbol PBW. Now, the PBW is the Power Shares, I should have said Wilder Hill Clean Energy Portfolio because that's the legal name. Top components are Vico Instruments, Ameresco Incorporated, Cree, Itron, Sunrun, and companies like that. This is a global ETF. It has clean energy companies in it from all over the world. And as you can see, it had a low in August of $21.09. And when I captured this chart today, it has since, excuse me, walked up this trend line and its 50-day moving average and is currently trading today at $25.73, maintaining a very nice uptrend here above its 20-day, 50-day, and of course the black line, the 200-day moving averages. Now, you think, well, wow, is this at all-time highs? And I wanted to tell you, if you look at a long-term chart, you'll see that the PBW was trading at $144 back in December of 2007. So this stock has, or this ETF, I should say, has quite a ways to go here. Again, it's trading in a nice uptrend. It does have probably support around $25 where the 20-day moving average comes in. It is again trading above its 50-day moving average. If it stays strong, if the PBW stays strong into the coming week, I may add shares of it to my portfolio. I'm watching it closely. However, if for any reason the PBW comes down and moves to close below the 50-day moving average, that would be my exit notice. That would be my stop. So as long as the PBW remains above the 50-day moving average, I'm interested in it. Now, this ETF does not trade with large volume size, so this is not a day trading entity. It's more of a swing trade or actually a longer term hold. I prefer this just as an ETF I hold above the 50-day moving average as long as it stays above that line. So let's see how the PBW is coming into the coming week. And now on to next week's economic reports. But first, please join us this coming Tuesday. We're altering our schedule again a little bit this week. Please join us this coming Tuesday, January 9th, for our next session of Toni's Market Club. We'll talk about which side of the market to trade, have a mini trading lesson, and I'll give you stocks and ETFs that may become right for high potential trades, along with their entry prices, protective stop prices, and profit target prices. So I give you everything you need to make these trades. This is a low-priced, high-value opportunity for you to learn more about the market, become a smarter trader, and make more money. So please join us. For those who cannot attend our live session, no problem. The recording of our session is available to all of our members just a few minutes after the session ends. For more information and to join, go to tonysmarketclub.com. Now, for the coming week's economic reports, there's always 1 week a month where there aren't many reports coming out, and this coming week is that week. Not much going on Monday and Tuesday. Wednesday, we have crude inventories. Thursday, we have jobless claims, our usual natural gas inventories. Friday, we have the CPI, or the Consumer Price Index, and retail sales, and the Michigan sentiment. Again, join us for Toni's Market Club this coming Tuesday. Don't miss out on this terrific opportunity to raise your trading skills and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.